How's it going, everybody? Welcome back to the channel. Welcome to the channel. All right, today's on assets versus liabilities. So what's an asset? What's a liability? Okay, so people could consider this a few different ways. They can consider an asset a house, a car, a watch, jewelry. Tons of things can be an asset, all right? Anything that has real value is considered an asset to most people, and a liability is anything that costs you money, all right? So anything like, say, a Netflix subscription provides no real value to you, that's a liability, right? That just costs you money every single month. Like a phone bill would just be a liability. It just costs you money. Yeah, sure, you get a phone out of it, but overall it's a liability. So that's what people believe are assets and liabilities. However, if you read a book called Rich Dad, Poor Dad by Robert T. Kiyosaki, he talks a little bit differently about that, and he talks about assets versus liabilities in a different way. He classifies assets as anything that produces you money, and liabilities as anything that takes money out of that column, your money column, okay? So he defined them a different way, and I'm gonna write some examples on the board, and then we're gonna go over them. Okay, so I got assets versus liabilities, and before I get into the liabilities, let's go over the assets. So some assets, not all, these are just some examples of assets, and they are stocks. So if you own any stocks in a business that would have value that you could sell for cash, therefore that would be an asset. Dividends, obviously, if you own a stock and it pays dividends, that's even better because it is producing you money. It's an income source, all right? So think about it like that. If it's an income source, it's an asset, all right? Another thing would be like rental properties. So rental properties, now this one's a double-edged sword because rental properties can lose you money as well. However, the two main positives are, the first one is that even if you're losing money, you still have the value of it, okay? So that's first and foremost. Second is if you do get a tenant in there, and you know, you have a rental property, there will be some times that the market is slow and you're not gonna get a tenant. That's definitely possible. So it will then not be producing you an income, but you still own it, and the cost will be very minimal if you're not living in it. So then you do get a tenant that then makes you money, all right? Not only does it make you money, but they help increase your value and everything like that, and you can then leverage yourself to go buy more if that's what you want to do. Next is businesses. So businesses are an obvious one. If they're producing you money, then obviously that's an asset, right? So businesses that produce money and are cash flow positive would be a very good thing to have. Anything that really produces you money. Obviously, even bonds can be in this. Even like if you have a really good savings account that produces you money, I mean, and it's not costing you anything, that's technically an asset, right? Anything that produces you money. If you have a YouTube channel and it makes you money, that's an asset, okay? Anything that makes you money is an asset. Now let's go over to liabilities, all right? Because some of them, so some of these liabilities are what a lot of people believe to be assets. And he says this is what the middle class believes to be assets. This is the reason the middle class stays the middle class, is because they buy liabilities that they believe are assets. Let's talk about the liability side of the board, okay? So we got a house. Now, I just said that rental properties are an asset. So how is a house a liability? That's because if you're living in a house, it's not producing you any money. Plain and simple. Or if you're now, yes, you can do Airbnb and all these other things, and that's different. But if you're just solely living in a house and it's producing you no money and taking money away, it's a liability. Now, I know you're not going to be homeless. You need a place to live. Now, I'm not saying don't buy a house. I'm just saying, just remember, it's a liability, not an asset. And don't think of it like that, okay? Next, we have a car. Now, cars are one of the, in a way, stupidest and greatest things you can buy. Now, I have a car. I love my car. It's an Audi S5. It's a fairly expensive car. Cost me a pretty penny. But I know just as well as anyone that it doesn't produce me anything. Yes, I get to drive somewhere, but it costs me premium gas, and it costs me a lot to pay for this thing every single month, right? It's one of my higher expenses every single month, not to mention insurance and all the other costs associated with owning a car. With that said, I love owning a car. So it's a give and take, right? But again, it's a liability. Since I bought my car, it's depreciated. I don't know how much, but it's definitely depreciated. Now, I normally don't like to buy new personally, just because the depreciation factor is so high, and I think it's a waste of money, to be honest. When you buy a brand new car in 5 years, you're going to lose half your value. Simple as that. I don't like parting with half my money in 5 years. That's a terrible investment. All right, that's why I don't like to buy brand new. All right, so I think it's a waste. I like to buy it at least a few years old. I think you get the best value for your buck. All right, especially if they come off a lease trade-in or something like that. I think it's just best value, my opinion though. Next, we got loans. So loans are an obvious one. Obviously, that takes away money, and it costs you money because you not only have to pay back the loan, but you have to pay back interest on that loan. Depending on what that is, that could vary, and it could be very costly. Okay, so loans are never a good thing. It's a type of debt, which leads to credit card debt. So obviously, consumer debt is credit card debt, and this one is not good. Okay, no one wants credit card debt. The rates on these are absolutely ridiculous. You thought loans were expensive with maybe 5-10% on some loans. If you get a bank loan, that's about what it is. Obviously, a house loan is a lot cheaper, but if you get just like a loan, if you want to go buy something or take out just any loan, it ranges depending on bank. But I remember I even got quotes when I went to go buy my car, and some of the quotes I got were around 9%. All right, I ended up financing my car for was it about 4%, 5%. So that's obviously substantially higher, and I decided to go with the cheaper option. Next, if we go with credit card debt, so this is substantially higher. I've never actually paid interest on my credit card. I pay my credit card every other Friday normally, so no matter what, I'm not going to go over. All right, I'm not going to pay extra. So I just paid it. I paid it the Friday before, so this Friday I'll be paying it again. All right, and that's how it works. I keep a schedule, so every other Friday I pay it, and I make sure to pay it so I never get hit with an interest payment, because the interest on my credit card is 19.99%, basically 20%. All right, that's a lot. Now, if I spend say $500 to $1,000 in those 2 weeks, 20% of that's a lot, right? I mean, if we go off of 1,000. That's $200 right there. That's a lot of wasted money, in my opinion. All right, so don't let this thing roll. I got my credit card right when I turned 18, and I think it was one of the best decisions I ever made. I always use my credit card. Not only does it build my credit, but I get perks to using my credit card. I get cash back. I get mine in the form of travel points, which are then redeemable as travel points, or you can use it to then buy something. I can even use it to take actual money off of my statement. I've saved up about $400 right now to take off my statement, and if I want to go on vacation, it's almost double that off. All right, so I can pretty much get a free flight to most places. All right, if I want to go on a vacation, it's going to be mostly covered, or all are covered. And not to mention, I get free travel insurance when I book my vacation with this credit card, which is something I would have had to buy anyway. So that's like that cost me like $120 a year. So if I book a vacation, I instantly got travel insurance. Perfect. I think it works pretty well for me. So these are some things to keep in mind. Assets and liabilities. All right, just remember that if you want to become rich, you have to remember to always build your asset column, okay, and not build your liability column. You always want your asset column to outweigh your liabilities. That way you're in a surplus. And Robert Kiyosaki said one of the best ways to become financially free is to have your assets always outweigh your liabilities without earning active income. Therefore, say if you have enough dividend producing stocks, and you have enough money from rental properties and businesses that you bought or made or something, whatever, producing you more money than your liabilities, you're cash flow positive. You did it. You're friggin' financially free. And that is the dream, and that is what I'm trying to help everybody with. And I'm even trying to do it myself. I'm not cash flow positive myself. I'd like to be one day. My liabilities still outweigh my passive income sources, all right? For now, that is the case. I hope to change that in hopefully the next year or two. And the best way to help me change that is, if you could, hit that like button, hit the subscribe button, and turn on that bell notification to always stay notified on the latest and greatest videos I post, like this one, hopefully. Anyways, that would help me personally build my passive income sources, and I would greatly appreciate it. All right, that's pretty much it for this video. Just remember, an asset is something that produces you money, and a liability is something that takes money away from you. All right, so if it puts money in your pocket, it's an asset. If it takes money out of your pocket without producing you any money, it's a liability. Simple as that. Anyways, hope you enjoyed this video, and I hope to see you next time. And always remember to have an amazing, beautiful, life-changing day, and I'll see you next time.